Welcome to Morningstar. Japanese companies have promised the stock exchange and investors that they will continue to boost their stock prices. Driving shareholder value is a central part of the interest in the market right now. And how will managers capitalize on this opportunity in 2024? We're joined by Michiko Sakai, portfolio manager for JP Morgan Asset Management. She's on the team for JPM, Japan's Sustainable Equity Fund. Hi, Michiko. Thank you for joining us today. How is the evolving shareholder-friendly spirit among Japanese companies progressing, and how does this development contribute to the sustainability aspect of your fund?
Sure, great. Thank you for the question. The poor corporate governance in Japan was a result of multiple factors. Total dividend and buybacks by listed companies in Japan back in 2000 was less than 1/10 of what it is today. Why was that? The cross-shareholding is one of the reason, and the generally poor and conservative management style has led to low payout ratio and excessive cash on the balance sheet. It's because the indirect finance took much bigger part of the equity market historically. So for example, large banks were large shareholders for many companies, and those banks care less about the governance and the shareholder return. And we did have poor board independence, so little external directors sitting on the board, giving less or little pressures to the government to drive changes. So having said that, there has been some acceleration in improvements in corporate governance in Japan. The trend is looking increasingly structural in nature, and this actually started several years ago, but momentum has recently picked up with TSE, the Tokyo Stock Exchange, pressuring all the listed companies to come up with specific initiatives to boost corporate value. And it's not just TSE. We are seeing a change of investors' profile with more direct finance from players like activists, institutional investors like GPIF, and institutional investors like us. Such collective pressure is leading corporates to pay more attention to minority shareholders. In our stewardship engagement, companies in general are more willing to have conversations. So it's more of a two-way conversation rather than the one-way conversation. And as a result, in recent years, in May this year, 2023, we saw the largest ever number of companies conducting share buybacks. And the momentum has been picking up. The total yield trend of the market is clearly going up, and we see a wide range of companies committed to the change. But there's still plenty of cash on balance sheet for many corporates in Japan, and we believe that the greater value can definitely be unlocked, achieving higher returns of equity from here on.
Right. Well, this is a very promising development. And by investing more sustainably, some investors are concerned that they have to sacrifice financial returns. So what is your take on this?
We believe that sustainable investing actually means that integrating financial material ESG factors into investment decision making to help improve risk-adjusted returns. And there doesn't have to be a trade-off between ESG and financial return. As long-term investors, by integrating in ESG factor along with other financial materiality factors, we can identify opportunities while managing risk that could negatively affect portfolio returns. And just to add on to that, ESG has always been a major part of our investment process long before it has become the buzzword in the recent years. So we believe that it is important to consider sustainability in its broad sense, including the sustainability of business, economic profit, and duration.
And as we enter 2024 very soon, what are the key catalysts that you see that you think the rally hasn't done and investors should keep an eye on?
Sure. One thing to keep in mind is that Japan is a bottom-up story. So companies in US and Europe and around much of the rest of Asia have far higher level of analyst coverage than when you compare to Japan. So 50% of TOPIX listed companies in Japan have no research coverage at all. People haven't been looking closely at Japan. So all of this may present a gift for us. This creates opportunity for informed investors and active investment manager like ourselves with deep knowledge in the Japanese market.
And with this, from a bottom-up perspective, where do you see opportunities in Japanese equities that can ride on the corporate reforms and the catalysts you mentioned?
Sure. Despite all the talks around Japan finally ending the deflations or the governance reform policy, one very important point to emphasize is that Japan is about individual stocks, not about the economy. So the economy, the GDP has been pretty stagnant over the years for Japan. But when you look at the EPS growth of TOPIX since 2010, it has grown as strong as EPS growth of S&P 500 in local currency term. So if you look deep enough, we can find great companies that grow sustainably and with strong duration in Japan. So we are constructive on several thematic in Japan. For example, we believe that companies that will help reduce carbon footprint have long durations. So environmental conservation. And there are many Japan brand companies. So many brands that are strong, not only in Japan, but globally. And there are multiple companies with strong IP. And Japan is home to top technology companies, such as in semiconductor materials and machineries. Also, aging society and digitalization is another topic as well. It's no secret that Japan is facing a tough demographic over the long term. And there are companies that can actually benefit from this overall demographic change by providing solutions. And lastly, automation is another theme. Labor shortage is a serious issue not only in Japan, but in many regions globally. And there are strong players in Japan in the automation industry. So those are just some of the key themes that we are looking at.
Right. Thank you so much for your insights, Michiko. For Morningstar, I'm Caitlin.